Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have here a returning guest. His name is Andy Hoffman. He's at milesfranklin.com. He's the marketing manager. Thanks for coming on again, Andy.
As always, a pleasure.
Okay, wanted to look at today's market, and we saw Apple stock. It dropped $60, and as a disclosure, I did buy some shares for a trade, but what is your thought process on Apple? Is this a bubble? I mean, we have some bond managers who have called this correctly. His name is Jeff Gundlach, and he actually was right on many trades over the past few years. And he said that Apple is a bubble. Do you agree with that?
Well, how about that? I said it too, and I'm not a big-time manager like Jeff Gundlach. But look, it's not that it was, from a valuation standpoint, a bubble. I mean, its P/E ratio is no more than 10. I mean, it's just that big of a company. But the fact is, when you talk about retail, which is all that Apple is, discretionary retail, it can only grow so fast. And any new emerging retail company has the same problem. There is just no way that a company that sells a commodity product can have a $700 billion market cap. And I was writing about that every day this summer, not so much because I have a problem with Apple, simply because I couldn't believe I was seeing a little mini mania build up after what we went through 10 years ago.
Yes, you did write about this, and you did say that the Plunge protection team as well was probably involved with the stock. And I do remember reading something about the Israeli central bank had some sort of position in Apple stock in the mid-500s, but yeah, I mean, do you think the Plunge protection team just totally gave up, especially after Dick Beauvais' old firm had this huge leverage position? Ever since that position blew up, it just seems that the stock has been on the downside.
Well, I don't really think there was that much to it. I think there's still a lot of animal spirits out there. People just don't learn their lessons. And when it comes to Apple, I've called it the surrogate PPT simply because, not because the cartel, the PPT needed it so much, just because they saw momentum in it, and as a result, we're tying a bunch of algorithms to it. And that's why if you look up until the point the stock peaked in the summertime, there was like literally a 1-to-1 correlation. It was eerie how the chart of the S&P 500 and Apple were equal. It was almost like they were tied together at the hip. And then, of course, as soon as it started falling, that relationship broke, and it was almost like the PPT said, well, we're not going to deal with this stock anymore. But look, the fact is, there's been $250 billion of money lost in this stock. And if you look at the list, it's the same old thing as ever. I mean, I just wrote a piece called Hedge Bombs about hedge funds and their what a horrible, horrible investment they are. I mean, Apple was the number one investment last year, the number one holding of the hedge fund industry. And it's now fallen, almost 30%? So
34%.
34%.
Yeah.
So it's just, yet again, people putting their money on Wall Street and watching it just get thrown away.
Yep, I totally agree. Moving forward, I wanted to get into this huge topic that actually happened last week. I know you've been interviewed on this and blogged about this, and it's regarding the German repatriation of the gold. And it just seems that gold prices went up last week, and then they've been hammered since then, probably because you have this fluctuating yen trade. Whenever the yen weakens against the dollar, you just see the gold plummet. I've noticed this over the past month or so.
Well, I would disagree with that completely. I mean, gold was sitting at its multi-month high as recently as yesterday morning. It was sitting at 1695. They've been capping it at that level like crazy for the past several weeks, and particularly in the last week since the announcement that the U.S. Mint was running out of silver eagles. I mean, yen gold was hitting all-time high after all-time high. In fact, today with gold down $17, yen gold was still up 0.5% because the yen was down 2%. I don't really think it has anything to do with the yen. In fact, the weak yen only makes gold stronger because obviously people in Japan are buying. It's really just a matter of there's just too many things going on that the government needs to keep the prices down. I mean, they announced this fiscal cliff deal, which on its own is incredibly PM bullish. Just yesterday, they announced that they're delaying the debt ceiling. I wrote today that this was like legal language. more like children would make up. They're delaying the debt ceiling. I never heard of anything like that. So you have these things going on. Then, of course, you have the German repatriation. You have the U.S. Mint running out of silver when we don't even have a crisis at the moment. I mean, we're talking about some extremely bullish things going on in gold land, let alone what the Bank of Japan just announced a couple of days ago, which is why the yen is plummeting to new lows. And right after that, you had the Germans come out and say and warn that they're going to potentially get into this currency war. The British warned of it. And don't forget, the U.S. just announced QE3 and QE4. So, no, there is no reason at all that gold fell today other than it was attacked. And just like yesterday, if you look at the charts, 3 o'clock, 8:20, 10 o'clock, and 12 o'clock. It had nothing to do with news. It had nothing to do with anything other than them doing their standard things.
Yeah, it most likely is manipulation.
It is.
And I did, yes.
Go on.
Yes. But getting back into this topic of German repatriation of gold, we have to look at, okay, now is this going to create a musical chair situation? Now everyone's going to be scared. Okay, if the Germans are scared that they don't have the gold, probably because the gold is rehypothecated on multiple occasions, will other central banks decide, hey, you know what, we need to go to the Bank of England, we need to go to the Federal Reserve in New York, we need to go to other locations to get our gold. Is this going to set it off? Because right now you have Germany, first of all, they're going to get their gold within a 7-year span. So it just seems that they're going to just kick the can down the road because the Federal Reserve most likely doesn't have the gold.
Well, look, whatever the reason that the Bundesbank made that announcement, it's ominous for the United States because obviously trust is not there anymore, and they're not the only ones. Remember, of all people, it started with Hugo Chavez repatriating his gold from all of it from the Bank of England about 2 years ago, and since then we've seen a bunch of governments talking about it: the Netherlands, Austria, Switzerland, Ecuador, Romania. It's one at a time. They're all going to get nervous because, especially now that you've seen all of these massive QE programs go into effect. I mean, there's no doubt that the central banks are starting to worry, and care of the work that GATA started and that I and others have followed. I think there's quite a bit of knowledge out there that from the people in the central banks about that there may not be gold in Fort Knox or in the Bank of England, and they want to get it back. Now, of course, they have to be careful how they do it. The last thing they want to do is spook the market by being too draconian, and that's why you saw this absolutely ridiculous. When it comes down to it, the Germans are only asking for 300 of their, they're only getting 300 tons of their gold, which is probably only 20% of what they have at the Fed, and they're going to take 7 years to do it. I mean, 300 tons of gold is not that much, and it can be shipped over probably in a matter of 2 or 3 weeks. So when you see that, it only makes me believe that there really isn't the gold that's there, because there's absolutely no reason it should take seven years, let alone 7 weeks to do.
Yeah, that makes sense. Now I wanted to get into this topic of the stock market, or going back to the stock market. I see all these new highs, or all these 5-year highs when it comes to the stock market, or close to the 5-year highs of 2007. Dow's trading at around 13,800, and yet you have many people still unemployed, 53 million people on food stamps. They raised the payroll tax for payroll purposes, and as a result, we still have a stock market that keeps on going up. It makes no sense to me. So what's your reasoning? Just all this funny money printing?
Yeah, well, it comes down to you print money and you give it to the banks. The banks are not lending it. What they're doing is speculating with it because they know they're backstopped. They're too big to fail, and so it's free money. And then, of course, you have the PPT, which is supporting what I call the Dow Jones Propaganda Average. I mean, look, it literally, if anyone who reads me, there's a pattern called a dead ringer where it does the same thing. It just did it 9 days in a row, the exact same pattern. So, they hold up the big cap stocks. But the fact is, we were talking about hedge funds before getting killed. I think I read that 85 or 88% of all hedge funds underperformed the market last year, and actually did a study showing that over the last 5 years, if you could believe this, the average return on a hedge fund is negative for 5 years. And it's because the only stocks that are up are the major indices that are being supported. If you try to go in and buy individual stocks, you're probably going to get killed. But either way, look, it comes down to printing money and supporting markets, or as I call it, money printing, market manipulation, and propaganda.
So how long could this funny money situation go on? I mean, I remember in 2007, everyone was saying, oh, the stock market's going to go to 20,000 before the next recession. It's going to go up and up and up. You see the same sentiment by all these guys on CNBS and all these other mainstream outlets, and even the guys, some of these Keynesian guys on clusterstock.com or the Business Insider. So do you think that a mini crash or a hardcore correction is on the way?
Well, I don't really watch the stock market anymore, aside from, just out of curiosity. And I look for anomalies. I look to see if there's anything other than the constant manipulation I see every day. I look to see if there's anything that's different about it. That's all. Otherwise, it's just it's meaningless. The Dow hasn't had a meaningful correlation to the economy in years. But of course, there's so many tricks going on with the Dow to start with. For instance, if you put, they have a survivor bias. They've taken out in the last 4 years Eastman Kodak, General Motors, AIG, and Citigroup. If you put those four back in, the Dow is not up. It's down over the last few years. So, and that just breaks that argument up right away. And then more importantly, we're talking about real versus nominal gains. They're printing money and putting it in the market. But in real terms, and if anyone wants to see my presentation, I'll send it over to them. In real terms, the Dow is down over the past decade. And actually, if you use John Williams' shadow stats, it's down close to 70% when you adjust for inflation. In fact, if you just use the CPI, if you adjust for which the government publishes, the Dow is down 30% over the past 13 years. So it's all relative. A crash, not a crash. As far as I'm concerned, the only time that the market's ever allowed to go down is when there's an agenda, such as like right after the election, or right before the fiscal cliff, where they made it clear, they needed to make clear to the public that if we don't get a deal done, the market's going to crash. So they let the Dow fall a few hundred points, and they do their deal, which is, it certainly doesn't help the country. But then the market goes right back up. So I don't pay much attention to it.
And before I let you go, Andy, how can people follow your work again?
MilesFranklin.com. We're one of the largest bullion dealers in the country. Just give us a call, or come on and sign up for our free blog. I do twice, 5 times a day, or call us at 800-822-8080.
Thanks for coming on again, Andy.
Thank you, Raul. Good job.